Good afternoon. This is Craig Modelmog, Cornerstone Wealth Management, with this week's episode of Wall Street X's and O's. Welcome. Today's Friday, September 25th. It's hard to believe September is about gone. Thankfully, football is starting up again. And so we have something to watch versus Hallmark reruns about fall and you know, they're not that they're terrible. They're okay. I like them, but it's kind of nice to have something else to watch. The Nuggets giving the Lakers a run, although last night they got hosed. Referees don't want the Nuggets to go on. They want LeBron. They want LeBron in the championship because it's a better name. Yeah, is it conspiracy theory? No, it's a fact. Watch the game. It was terrible. I appreciate Coach Malone and him playing the political role of not coming out and just blowing up the referees, saying he was going to go through the normal protocol. That's how you do it when you don't want to get fined. So, Coach Malone, nice job. But anyway, to kick things off here today, again, the attitudes, definitely attitudes, and information expressed on this show are definitely mine. All the facts are supported and they are facts. It is not fake news, which is challenging these days. Investments can and will lose money. They are not FDIC insured, and this is neither an offer to buy or sell anything. This is mere me trying to educate and inform you to become informed and become a better investor. And that's what we're here about. So anyway, to kick things off, a little monologue, as of Sunday, it will have been 6 months since President Trump signed into law the CARES Act. I love how they create these little names, the propaganda and the flair and the flavor, the CARES Act. Well, the CARES Act is quietly coming to, it's like you go in your fridge and you get out your ketchup and it says expiration date. Well, the CARES Act is expiring. Here's what I mean by that. PPP funds, which were for independent contractors, sole practitioners, those basically are exhausted. We've got debit and credit card spending by the unemployed is basically fading, and it is going nowhere fast. We've got retail sales for the month of August was negative. We're basically seeing a transition from temporary to permanent unemployment. That is going to be accelerating in the coming months. The ranks of small businesses are now transitioning to permanent. Spit it out here. It is Friday. Transitioning. For those of you that have joined in, see, I'm kind of jumping around. This is how it works. This is uncut, it's unedited, and this is one of the moments where you're like, yeah, no kidding, it is. But anyway, we're seeing small businesses transitioning now to permanent closures, and those are on the rise. This is a sad deal. Support your small local businesses, okay? The big boxes have access to credit. They'll file for bankruptcy. They'll be fine. Small businesses, not fine. Take care of your small businesses, people. I'm telling you, okay? It's important. You also look at consumer income expectations. They're now making lower lows. So lots of challenges on the horizon. Plus, month to date, we've got an S&P that's down 7%, a NASDAQ that's down north of 10. Gold is down 4% plus, commodities down. You've got bonds mixed, and you've got a dollar that is up on the month. Interesting. I know it gets better. It gets better. We're obviously going to hit on jobless claims today. Here's kind of the topics that we're going ahead. We're going to talk home purchase applications, some incredible numbers there. We're going to talk about mortgage credit availability. Interesting. Yeah, I'm going to get feisty on that one. And we're also going to talk about housing. Okay. So if you look at it, jobless claims. This is interesting. If you look at unemployment, traditionally unemployment lasts for 26 weeks. Okay. After 26 weeks, people start falling off. So we're seeing the market enter kind of a period of what I'm going to call a double-sided squeeze. In baseball, you've got the squeeze is on, okay? This is a double-sided squeeze, and then what's happening is you've got people, we're seeing the first round of jobless claims starting to go down. Why? I think there's fewer people to fire. What sounds terrible, there are fewer people to fire. On the back half of that, again, the 26-week deal, because Congress and the president have done nothing the last 6 months, you're going to see that number start to decline as well. Why? People are dropping off and dropping out of the system. That is bad, okay? So if we get to some numbers here, here's what we got. These are big. These are really, really big. Cumulative numbers for the week. Jobless claims, initial claims, 870,000. That's kind of plateaued. We've gone, since they reworked how they are now looking at a seasonal type of number, or they're going to adjust it based on the season. Okay, the week of August 28th was 884, September 4th, 893, September 11th, 866. They actually went up. September 18th, which was last week, 870. That's not good. Okay, that is not good. If you look at total weekly claims, they dropped from 12.747 million down to 12.58 million. If you look at total unemployment benefits, we saw a big drop here. And this is that lagging indicator, if you remember, because we've got some that are on a 1 week lag, some are on a 2 week. This is the 2 week lag. This 2 week lag is a reduction of 29.76 million down to 26.045. PUA claims also declined for the second week in a row down to 630 million people. Here's what's going to happen. We're going to start to see unemployment claims drop subtly, okay? But we're going to see total unemployment claims drop a bunch. I think we're going to see the next couple weeks here, you're going to see a big drop. Why? The 26-week number, okay? The expiration. What's that smell? That's unemployment programs expiring unless Congress and the president get their act together. I'm just saying. Are they going to? You got the Republicans putting a very laser focus. We just want to help those that really need it. Then on the other side of the aisle, you've got the Democrats that are trying to create a program very similar to the CARES Act, which supports lots of different programs. They're about $1 trillion apart. To add some context to this, the TARP program, back in 2008 financial crisis, did you know that the TARP program, which initially was voted down the first time because it was too big, $700 billion. Now they're throwing trillions around like it's nothing. That makes me nervous long term, okay? On to housing purchase applications. This is incredible. Week over week, we saw another increase, 3.4%. Year over year, purchase applications are up 25%. This is like all-time. This is incredible. This is incredible. These are numbers we haven't seen in a really long time, maybe ever, okay, to this extent, okay? Housing mortgage credit availability. This is what really gets kind of interesting here, is you're seeing banks tighten up their credit qualifications, although we're seeing the number of mortgages accelerate to numbers that we have not seen in a very long time. All right. What this is doing is this. You're seeing people who qualify for a loan are buying a new stinking house. People that don't qualify wish they could, but can't. This is further expanding the gap on inequality, which is really coming to a head. You're seeing a lot of that. The federal government says, oh, we're, or the Federal Reserve says, yeah, we're not in the business of creating or widening the gap on inequality. I'll call BS, okay? We've got interest rates very low. That's what's continuing to spur this lending craze. It is also driving housing prices up. Next chapter here. Housing prices. Existing home sales rose to a 164-month high. We haven't seen numbers like this since fourth quarter of 2013. This is crazy, okay? Here's what's amazing. And you know I'm just full of stats. The national average, for the first time, the median home price exceeded 300,000. This is in the United States, the first time ever. Here in Fort Collins, median home listing, 448,500. I've got some realtor that sends me an update every month on my house. I look at what they're telling me I could sell my house for. I'm telling you here, I would not pay that for my house. I've got old carpet. I've got old amenities. I do have a fresh paint job that I've put on there. On the outside a couple years ago, on the inside now, I just put new windows in because after 20 years, they start getting foggy. You can't see through them. I would not pay for what they say my house is worth. This is what's crazy. You've got interest rates going so low that it is spurring another frenzy of buying, which is driving housing prices up like we've never seen before. Do I think that is something that we should be concerned about? Probably. Is it bubblish? Bubblicious, juicy fruit, hubba bubba. Probably. I'm just telling you. Interesting times. All right. We have a VIX, which is volatility index. We're moving on here. That has been at elevated levels. What I am anticipating is this to continue on. While the VIX remains elevated, it's going to provide for big swings in the stock market, much like we've witnessed here in the month of September. We had a huge sell-off in March. We've had a huge rebound since. Now we're seeing another exhale in the markets. Markets were up today. We'll see if it persists. We have a debate on Tuesday night, which for fight fans, this may be one of the most watched debates ever. That is my prediction. If it was pay-per-view, I would stink and buy it because, like I told you last week or maybe the week before, I could see them scrapping on stage. I wouldn't put that past either one of them. I think they really dislike each other that much. And I think it's going to be literally gloves are off, and the next 40 days up to election day are just going to be ugly. I don't know about you. I'm already tired of the drama. I'm sick of it. I want people who are in the government to do things that are reflecting what the people want and what the people need. I'm not sure we've had that for a very long time. And I don't care if your party has an R in front of it or a D in front of it. It's all stinking pathetic in many cases. And I'm not going to get political here, but it's pretty pathetic. On the US dollar, this has been interesting. I've been talking a lot about the dollar and how the government is trying to devalue the dollar to try to create inflation. That's what they're trying to do. The last week, they have failed miserably. I went from short the dollar to going long the dollar to going back to short the dollar. I think the dollar has run its course. It may have another up day. It was down yesterday, up a little today. The government wants the dollar to go down. Why? They are trying to create inflation. Whenever you have an interest rate environment, they can't go up. Do you understand? Interest rates cannot go up because if they do that, this country is going to implode. Because we can't have a high interest rate environment with all the debt that our government is servicing. It is not possible. It is mathematically not possible. So I fully expect the dollar to continue its devaluation, and that is regardless of who wins in November. By the way, also, I think regardless of who wins in November, it is going to be a contested election, which the markets always hate that. So I think you need to buckle your seatbelt up and get ready, because I think it's going to be some interesting days ahead. Very interesting days ahead. But I'm excited. I'm looking forward to it. I feel like we're positioned very well. I like the equities that we have exposure to. I also like our bond exposure. High quality treasuries, high quality corporates, particularly actually I'm barbelled, long-term and short-term. And then we own some Treasury inflation protection notes still, which are U.S. Treasury bonds linked to inflation. And I'm playing the dollar. I'm going to continue to play the dollar. And we've had a really good quarter where you've got a Barclays Ag that's about flat, and our bond exposure is up about 2.5%. And we're going to continue to maximize that because it's low risk, but we can actually create return by really leveraging and maximizing our opportunity that's ahead of us here. Okay, so I'm excited. Good days ahead, I promise you. Okay, Google, how many days until Christmas?
Christmas in Fort Collins is in 91 days.
There you have it. Jim, if you're watching again, 91 days until Christmas, plus another 6 for you. That means 97 and you're done. Good buddy of mine. For all the rest of us, it's about Christmas and shopping. I'm not sure there's going to be a lot of retail in-person shopping with COVID. I think there's going to be a lot of online stuff. So I know everyone is looking at deals. Amazon has their gig coming up in October. You're already seeing. I was in Home Depot, actually Lowe's the other day. They're stinking Christmas stuff out. Oh my gosh. Anyway, we're getting close. I am excited. I love the holidays. Anyway, guys, 15 minutes and 48 seconds. Record. I'm like 5 minutes less hot-winded today. I always love seeing you guys. I hope these things are helpful. I'm really trying to inform and educate you about the things that are happening that are not being disclosed on our media channels, because there's a lot more happening below the surface than what you see. It's like the iceberg. You know what's below the surface? Yeah, I would say something, but I know my mom is watching and I don't want to get in trouble. So anyway, for Friday, November 25th, dang it, I'm already fast forward. For Friday, September 25th, 2020, at least I got the year right. This is Craig Modelmog for this week's episode of Wall Street X's and O's, and I am